If you want to win trades, just follow this simple one candle strategy. Step 1. Pick a pair with a clear candles, meaning it should be producing engulfing candles with decent body size. Additionally, the pair should not be a range bound. Step 2. This is a green engulfing candle. Pick the rectangle tool, mark the area of the wick, starting from the close of the candle's body. After that, I pick the line tool and mark the top of the wick. Then I mark the bottom of the wick. And third and last line is at the start of the candle's body. But we also need to color these lines. I'm gonna pick red color to mark the start of the body, and the green will be the close of the candle's body. However, you can pick whatever the color you want. So based on these markings, here is how things will work out. The rectangular area between green and white line is our area of interest. The body of the candle is free range, but anything beyond red line will be considered no trade for the day. Step 3. Here is how we are going to use. First, you switch your chart to 30 minutes. Then you need to find 1700 by looking at the bottom of the chart. And once you spot this, pick the vertical line and draw it in. The 1700 is what we're gonna consider the end of previous daily candle. Next, we're gonna mark two more times. One of them will be 5 AM and the other one will be 1800. So the time between 1800 to 5 AM is actually entry range. Based on this setup, if the price moves towards white line only, then it is not a valid entry. But if the price goes up, then turn below green line. After that, it managed to go above green line as well, then this will be considered valid entry. However, if the price after opening keeps on dropping towards the red line and it crosses it, the whole day will be considered invalid for the entries. This is how it will work. Only after 1800 we will wait for the price to show some sort of confirmation. As explained, the price needs to go below the green line and return back to the area of interest by crossing green line again with a green candle of a decent body size, meaning it should not be a wick candle. Then and only then we're gonna enter long position. So this is our entry signal. Use 1:2 ratio for the entry and keep your stop loss below these swing lows. And this is how it will play out. Notice how trade ended up reaching to the target before 5 AM vertical line. So anytime the trade appears after 5 AM, we do not consider it as a valid trade. You will learn this in the next example. To see how it actually played out, you can switch your chart back to daily candles. As you can see, this candle has been a bullish candle with the wick. Therefore, next up we will search for the long entries based on current green candles, and we will mark our points again. Since the current candle is a bullish candle with a decent body size and a wick, therefore we will only aim for long entries. Now I'm just going to drag these lines to our current candle. Now switch the chart to 30 minutes and mark previous day close and entry range. Now run the price. Here you can see price crossed through the green line and the candle has closed within the area of interest with a decent body size. So it's a signal to go long. So with this strategy, it is very important that you understand when to not trade. For example, over here, the condition is looking like another long entry. Therefore, we mark our points and area of interest. Now we drill down to 30 minutes. And on the price section, you can see the price has crossed the green line and enter into the area of interest. But is it a valid trade? No, because the price did not go below the green line after crossing 1800 time. Therefore, we will ignore this trade. That is because the outcome of the entry would have been this: a high chance of losing trades. Since this candle is not a clear bullish or bearish candle, therefore there is no trade for the day. So we move on to the next day. Notice how this candle is within the range. Hence, we will ignore this as well. Next up, we have this green candle, which is also an invalid candle. Now moving on to the next day, we see a bullish engulfing candle breaking through the range. Hence, there is a valid entry for the day. Now moving on to the bearish scenario. On the bearish side, this is a clear engulfing candle. So we mark the wick of the candle, but this time we're gonna do it in reverse. After marking the daily candle, as usual, switch to 30 minutes. Over here the price has crossed through the green line. The price needs to exit through the green line and needs to re-enter into the area of interest between 1800 to 500. The entry rules are the same for the bearish scenario. On this occasion, the price did not cross, but it was after the 5 AM. So there is no trade. However, if we had entered the trade, the price will easily hit stop loss. Moving on to the daily chart. As explained, this is not a valid candle. And this is also not a valid candle. However, this is a perfect one. Now we mark the area of the wick, as well as the time slots on 30 minutes. So when you are on live chart, the best thing to time slot is right after 1700 and finish it before 1800, then simply follow the entry model. Most importantly, the time on the chart should be selected as New York. And this is the perfect entry with 1:2 ratio. But if you want to learn how RSI indicator can get you winning trades, then watch this video.